Number of retailers are taking drastic steps after being hit hard by the coronavirus. Neiman Marcus missed a bond payment and, according to Reuters, is preparing to seek bankruptcy protection. Nordstrom suspended merchandise orders, and Macy's is exploring options to shore up its finances. And joining us now to talk about the long-term industry impact, Stephen Sadove. He is former chairman and CEO of Saks and former chairman of the National Retail Federation. Stephen, what do you expect Neiman to do? How would that look? What would stay open, and what are you really expecting?
Well, I think that the Neiman situation is an example of what's really going on in retail right now, where these companies first were facing major liquidity issues. Now they're facing the question of what's it going to look like to open, and then what are sales going to be like? Neiman's has a situation where they had very highly leveraged, much too much debt. It was a company that was on the edge with its debt before the coronavirus hit. And now they're going to, I think that bankruptcy will allow them to wipe out part of their debt. Maybe they'll end up closing some stores. I don't know whether they'll liquidate or not. That's a possibility. There are a lot of other possibilities. Somebody else might come in. Richard Baker at Saks has for ages been talking about wanting to own Neiman's. So there are a lot of possibilities open on the Neiman's front. A lot of that story is still to be written.
Some really valuable assets. I mean, I can't imagine that Bergdorf doesn't emerge from this. Bergdorf was not going to be closed here in New York. Do you think, Steve?
No, I don't think so at all. In longer term, Neiman's is still a $4 billion company that is making a fair amount of EBITDA. So it's a profitable company, but it has much too much debt. It's a good example of highly leveraged LBO type of companies do well when they're growing, but when you don't have revenue, you've got a fundamental problem with these businesses. I think, Joe, one of the issues that we got to think about is we went through a phase. The first phase of this crisis was liquidity, which was how do these companies conserve cash? They stopped orders. They laid off or furloughed an enormous number of people. They've stopped paying rent. Now we're out of that phase. Some of them aren't going to make it through that piece. But now we're talking about how do you open a store? And that's a big issue because are people going to run back to the malls? All of the financial aid programs have been bridges to allow you to get to the next phase with an assumption that the consumer is going to come back and shop pretty quickly. And the real issue is, what is the recovery rate? Is it a V? Is it a long-tailed U? Is it an L? And as we look out into the fall, the real question is going to be how quickly does the consumer come back? Because all of these programs don't work if the consumer doesn't shop come, let's say, the fourth quarter, because none of these businesses were built for a no revenue model.
What about the malls? When is that ever going to be a business model that works again, or when will that be a business model that works again?
I think, Joe, that's the fundamental question. I think that the mall will revive itself. Outlet malls, the outdoor malls will probably come back more quickly than some of the indoor malls. The A malls, the ones that are the premier malls, are going to find ways to operate well. You're going to have a lot of carnage in the mall industry. You're going to see different kinds of deal structures. Apparel companies are probably the toughest because they've taken the biggest hit so far. You're seeing sales that are even the month of March, where it was only half the month, they were down 50%. So what you're going to have to find is, how does an apparel company come back? How do people try on apparel products when they're not comfortable whether or not the virus is there? These are questions that have to be sorted through. And so I think the mall is going to be slower than some of the freestanding stores. This is really a story about winners and losers, and the companies that are providing the basics, the Walmarts, the Targets, are coming back. They're doing remarkably well. The mall operators are going to have to test their way into this relative to what are the new standards. You're going to have to be testing every employee. What are you going to be doing to make people who come to the mall comfortable that it's safe?